Hey, this is Brent from TradeGuild.net. It is Wednesday, the 24th of September, and today we're looking at a 5-minute chart here. This is this morning, and you can see today that pretty much just range-bound trade prevailed throughout the day. Basically, traders are just nervous right now, not knowing what's going on. One thing that did happen, a little vote of confidence from Warren Buffett from Berkshire Hathaway. He put up $5 billion. So Goldman Sachs, he put in $5 billion into Goldman Sachs. That's perpetual preferred stock. And Berkshire will also receive warrants to purchase another $5 billion of Goldman Sachs stock at any time within the next 5 years. Goldman also priced another $5 billion of common stock at a public offering of $123 a share. So you can see Goldman was up 6.36% today. It was a vote of confidence, basically. A vote of confidence in Goldman Sachs and a vote of confidence that Warren Buffett believes that the government will stabilize the financial system. Traders really didn't care. Chairman Bernanke stated before the Joint Economic Committee that stabilization of the financial system is key to an economic recovery. At the same time, Treasury Paulson stated before the House Financial Services Committee that stabilizing the U.S. financial system must be done to avoid a continuing series of financial institutional failures and frozen credit markets. There's lots of questions from Congress, but there's very little in the way of a solid signal of what they're going to do one way or the other. That's why the market has been negative, selling off the last couple days, and today just kind of hanging out, waiting to see what's going to happen. If there's one thing the market does not like, it is uncertainty. The market likes to price in events between 6 and 12 months into the future. That means what you're seeing in the price today, they're pricing it in 6 to 12 months out. So right now, the market's in a holding pattern, not knowing what is going on with this proposed government bailout plan. Let's take a look at the Qs real quick. A little marker here. So here's the open today, this morning. You can see just this range-bound trade continued. A little sell-off at the end of the day, made some new lows, and then we saw a little bit of a rally on some decent volume towards the end of the day. A couple things to note here. Remember, this is a 5-minute chart. You see this rounding kind of shape here in the volume. That's actually what's called a rounding bottom. Typically you'll see it on longer term charts, but on a 5-minute chart, it's significant as well, as we look at some other things a little bit later here. Down here at the bottom is a long stochastics. I use a very, very long period, 50 period. Usually people use 12, but I think this just filters out a lot more of the noise. So you can see the stochastics is actually crossing over, which is a positive event, and it's way down here at that 20 level. So it's saying market is pretty deeply oversold and perhaps ready for a bounce. But remember, that's a 5-minute chart we're looking at. Okay. And also, let me pull up home builders here. That's XHB for telechart. And here we go. So home builders today up almost 3%. Kind of interesting. The housing market continues to deteriorate. The August existing home sales came in today. The number was that they fell 2.2%. The consensus was that they would fall 1.2%. So they fell 1 whole percentage point, which is significant, further than they were expected. And the home builders ETF here, the Spiders Home Builder ETF, actually was up 3%. So that's kind of interesting. Who else got hit today? A major hit was in airlines, and here's the airline chart. Okay, so these guys got hit 5.5%. I don't know what this is due to, but short-term traders are jumping all over stuff like this. Also, coal got hit today, mining and steel got hit today. Basically, 6 out of 10 of the economic sectors finished higher today, but there wasn't one that provided any kind of leadership, so you can't really read too much into that. If we take a look at the Dow Jones 30 again, All right, sorry, that was my phone there. So the Dow Jones 30, you can see volume down here, very light today. Volume was 1/3 of what it was last Friday, which was a record-setting day. So volume remains light. It's just telling us basically, traders are not making any commitments one way or the other. If we take a look at the QQQs real quick, this is the ETF for the NASDAQ 100, and we're going to look at a 5-minute chart over here. You can see we got a nice bump today, like I mentioned earlier, towards the close, which is interesting because the professional traders are the ones that come out towards the close. And we're going to stitch this together with a couple other things here in just a second. Let's take a look at, this is my personal indicator. It's called 3C. And I use this to determine whether a stock or an index is under accumulation or distribution through negative and positive divergences. For instance, over here we have a negative divergence. Price makes a new high. The indicator makes a lower high. That's a negative divergence. That tells us this pattern or this action over here is distribution, and you can see the stock, or in this case over a period of 3 days, the Qs fell. Now we're seeing lows being made, and we're seeing this indicator moving up. So this is a positive divergence, and I'm going to show you a couple of these because it's kind of interesting what we're seeing here. Let's pull up real quick. Let me get rid of this mess here, and we're going to pull up the spiders, which is the ETF for the S&P 500. And again, we see the same thing towards the end of the day here, and actually about noontime on, we see what is called a leading divergence. This is very positive. This tells me, in my opinion, that even though the action's been very quiet and contained, that we're seeing accumulation. They're getting ready for a move higher. That's my opinion. Let's look at the Dow Jones 30 real quick. And we're going to look at this 3C indicator again. And a lot of these are on these 10-minute time frames I'm seeing them, so it's a more significant time frame. Again, another positive divergence. If this was in gear, the yellow line, if it was in gear with price, it would just keep moving down. We see it's moving up, so positive divergence there. I have another indicator here, another positive divergence. So we see that on the 10-minute. I have a couple other versions of this. Let's look at, this is a faster version, and a huge leading divergence here. Very, very positive action there. And finally, this is my fastest 3C indicator. This one picks up, very fast action, very subtle action, actually, like market makers and stuff. And again, over the course of the last 3 days or so, positive divergence brewing here. If we take a look just real quick, because I don't want to run out of time here, the Dow Jones 30, and we're going to look at a daily chart, what we see is a pattern over here called a doji. That's this little bodied candle here. This is today's price action. It tells us that this downside momentum, these bigger, larger candles that we're showing momentum, we're losing downside momentum. If we look at the S&P 500, we'll use the spiders for that. Okay, we see the same thing in the spiders. If we look at XLF, which is the financials, we see something similar there, downside momentum, loss of downside momentum along with that volume. And most significant, the Qs actually formed what's called a star, and that's just basically price opens and closes just about the same point. So this is showing, and it's also a harami because it's inside this candle. It's like you think of it as like this is the mother and this is the baby, like pregnant inside. And that price pattern is a very strong reversal price pattern. So in my opinion, I think we're going to see a bounce higher. I don't know, how much, how far, but I think in the next few days we're going to see that. Tomorrow at 12 o'clock we have testimony from Bernanke and Paulson. We have the August durable good order coming out at 8:30. That's pre-market before the market opens. Also at 8:30, weekless jobless claims. And new home sales data will be in at 10 a.m. So all those have the potential to move the market. And last, I just want to say, if anybody's in the South Florida region, specifically Palm Beach County or Boca Raton, I'm going to be teaching a class, technical analysis. This is my third semester teaching it at Boca Middle School. It's at night. So it's like continuing education for adults. It's 101, but by the time we get through the 8 weeks, you'll be up to 103. We cover a lot of ground real quick. So if you're interested in that class, shoot me an email and I'll give you the details. So that's going to be it for today. Look for updates on the site tomorrow at tradeguild.net. There's a hyphen between trade and guild. And I'll talk to you tomorrow. Thanks for listening.